Just how clear will the earnings report be this time around, and how much can you actually read into it?
Good morning, Tom. I think you can read some of it in that obviously the profits are eroding, as for example, those projections show. But then we have no activity really on the ground to make a real good assessment how much profits are really generating as we speak and going forward. And I think to that point, we're going to get data this week, particularly retail sales and consumer confidence and so forth. Again, highlighting that we're in the collapse of the economy currently, and these earnings are added to that. That it is a very bleak picture, whereby the recovery in the future is still to be seen.
As a macro strategist or analyst, how much are you looking at these particular microeconomic data points to add to the bigger picture of what's going on? We know that the economic data is bad and possibly getting worse. So how much does that factor in, these company-specific reports, into the overall narrative for how you craft strategy?
I think one interesting thing of these conference calls that we may get to earnings calls is how companies are preparing for the reopening of the economy, how they're going to adjust their production and the way they operate, because we're in a new economy, so to speak. In other words, we're going to have social distancing for quite a while, and that's an adjustment. So that, I think, is an interesting aspect of earnings this week. Then the other hand is about there is some future still ahead of us, right? We will see recovery, and to what extent are these companies confident there will be recovery in the future, and how they're going to cope with that? I think those two things are relevant.
All right, now, what exactly do investors and traders have to look at or consider? What do they have to take into account as we take a look at the trajectory of the coronavirus and the potential for a reopening of the economy, both here and abroad?
So I think there are three things to look at. And in the first place, of course, is that the virus does consistently moderate, and that from the signals that we're getting from the administration, that we're going to get measures taken in terms of testing and therapeutics that make it at least possible that we can start reopening the economy. The second thing is indeed the data. Yeah, we have leading indicators such as jobless claims have become extremely important. There's some other like same-store sales, et cetera, that are relevant too. I think that just continue to be watched, because any kind of change there will give us a sense of how strong the recovery will be in the future. And then lastly, we do have in general what we call a bridge, and the Federal Reserve and the central banks have built that in terms of the liquidity. And that liquidity is really key now, because a month ago we had a big stress. Now we're in a much better position. So as the market functioning improvement, has that a consistency and continuation to carry us to that opening of the economy, hopefully sometime in May.